This is Colin Cattell with Palisade Radio. Today we bring you one of the top commentators in the precious metal space. He is the owner of EuroPac Bank and host of the Peter Schiff Show. Today on the program, we'll be talking with Peter Schiff.
Peter Schiff, President of EuroPac Capital, welcome to you both.
Sure, there has been productivity growth in China, no doubt about it. In fact, one of the reasons
and in the U.S., some remarkable growth in the
U.S.
U.S.
Well, I would disagree there. I think that's more sleight of hands for the statisticians. I mean, if we really had...
Excuse me, I'm from Detroit. Have you been in an auto plant recently?
I think Peter's just totally off base, and I don't think it's going to be... I mean, I just don't know where he's getting his stuff.
Well, one of us is off base, but it's definitely not me. Bottom line is I'm a big bear on the U.S. stock market. Remember, gold was in a bear market for 20 years. Stocks were in a bull market for 20 years. That's changed, and people have to understand that or they're going to lose a lot of money. First of all, you just described the U.S. market as being bulletproof, and I think gold is telling us that it's about to get shot full of holes here. The housing market is just beginning to unravel. We're seeing the tip of the iceberg here.
How do you put together all this gloom and doom? What data tells you this, Peter? You talk about the collapse of the NASDAQ and that incredible bear market that we had. Those are usually once-in-a-lifetime events. And you're suggesting that in very short order, less than 10 years later, we're going to have another one?
Peter, first off, a big welcome to the program and thanks for joining us.
Oh, sure. Thanks for having me on.
The clips we just played was a set of appearances you made on national TV in the months and years leading up to 2008. In the face of extreme positive sentiment in housing and the stock market, you called for a crash. The mainstream laughed in your face, called you a charlatan, said you were just another gold nut, and of course they were dead wrong. Nearly 8 years later, you're back and calling for another wave of crashes and bubbles to burst. What do you see this time around?
Well, unfortunately, all of the problems that led to the housing bubble and the inevitable financial crisis, all those problems are now worse than they were. And it's interesting that all of the so-called experts, the economists and the market strategists who didn't understand just how sick the economy was leading up to the 2008 financial crisis, they don't understand that it's even sicker now. Right? They never understood the disease. They think the Fed's cure worked, but the Fed's cure only made the disease that the Fed created worse. But the problem is you don't really find out, it doesn't become apparent how sick the economy is until the Fed stops medicating it with QE, because QE is really kind of like a sedative, or it's maybe like Novocaine, where you don't feel the pain until it wears off. And we've had a lot of quantitative easing, we've had 0% interest rates for a long time, and that has really screwed up the U.S. economy. And as we come off QE high, that cheap money high, the hangover is going to be, spectacular. I think we're headed for a much worse financial crisis than 2008. The government, of course, is going to try to head it off by launching QE4, and that's something that the markets are not anticipating. And I think when that happens, you'll see a big reversal in the dollar and in the precious metals market.
Peter, you've continually denounced the Fed's QE program and stated the Fed will bolster their QE at the slightest sign of a correction or a crash. And just a couple weeks ago, the general equities dropped by roughly 8%. Within 3 days, Fed officials came out and declared their openness to continue or increase asset purchases if necessary. A total about-face from the statements made earlier in the month. We don't need to go into this because we all know the Fed's tricks, but what's amazing, but maybe not so surprising, is the market reacted to the policy change by reversing course and heading upwards again. What more confirmation is needed to prove this entire bull market is a result of Fed policy? But the question is, at what point does this Fed policy lose its effect? Because it's gone on longer than many of us could have imagined.
Well, remember, from the very beginning, I said it would go on indefinitely until there was a crisis in the dollar. When they launched the first round of QE, I said that they would continue to do it. They launched QE2, and everybody was surprised, but not me. I said we'd have more QEs than Rocky movies. And it's amazing that people think QE3 is the last one. I mean, the reason we had QE2 was because QE2 didn't work, QE1 didn't work. And the reason we had QE3 was because QE2 didn't work. Well, QE3 didn't work either. And so that's why we're going to have a QE4. I don't know why people are surprised that, when the Fed pulls back, the market goes down. I mean, we all know that the specific purpose of QE3 was to lift the stock market, and they succeeded. They lifted the stock market. Now, the Federal Reserve claimed that if they lift the stock market, it's going to help the economy. Well, they made the stock market go up, but it didn't help the real economy. The real economy is still suffering because you can't grow an economy by inflating stock market bubbles or real estate bubbles. But the Fed is going to keep trying it because that's the only thing they know. But eventually, they're going to collapse the dollar, and that's what's going to bring an end to the party.
The underlying basis for your prediction about the crash in 2008 is still intact today. You believe the basic problem with the U.S. economy is an overabundance of consumption and borrowing with a lack of adequate production and savings. And my response to that would be yes, we operate on a fiat currency, which by its nature deters people from saving and incentivizes consumption. Unless we return to sound money principles, then you're going to continue making these predictions for decades to come. And since there's a bubble every 7 to 10 or 15 years, you'll be spot on in a way. So am I right that the only real solution is to abandon the fiat currency?
Well, we're not going to solve the problems until we stop making them worse. And so we're going to have to move away from these fiat currencies back to a sound monetary system, one, based on gold. I think that's the only one that does work. I think the Fed, though, is going to continue along this path as long as it can, right? This is the path of least resistance politically, because if the Fed were to stop the monetary stimulus, right, the hangover would be so enormous, the politicians would be forced to admit that they've promised more than they can deliver. They'd have to have big cuts in government spending, including entitlements. You'd have big declines in the stock market, the real estate market. Banks would fail. Investors and depositors would lose money. A lot of dreams would be shattered. People would be confronted with reality. And that's something that no politician wants. They want to keep on, kicking the can down the road. And so the Fed's going to do that as long as there's road. And the road comes from the willingness of foreigners to continue to buy dollars despite the fact that we keep printing them. But it's only predicated on the false belief that QE is temporary, that 0% interest rates are temporary, that the Fed has an exit strategy, that it's possible to raise interest rates and normalize the balance sheet. But none of that is possible, because if the Fed takes away the monetary stimulus, they take away all of the phony growth that has been created, and we're back in a worse recession than we were when the Fed started. But people don't understand that predicament. When they figure out that there is no exit strategy, that exit from this monetary policy is impossible, that it really is QE infinity, that interest rates have to stay at zero forever, no matter how high inflation gets, right? Then that's when, it's a game changer and the bottom will drop out of the dollar.
Why is the dollar so strong right now relative to other currencies?
It's because everybody is wrongly anticipating that the Fed is going to tighten. They believe that quantitative easing has worked, that 0% interest rates have worked, and because they worked, they're no longer needed. Well, the fact of the matter is they're needed now more than ever before, because they didn't work in creating a legitimate recovery. All they did is inflate a big bubble. And you can't keep the bubble inflated without the air. So the Fed can't suck the air out of the bubble and expect it to keep expanding. But that's what people think, because they misunderstand, or they don't understand that what they're looking at is not genuine economic growth, but bubbles masquerading as growth.
In your book, The Real Crash, you outline a hypothetical scenario whereby there are major changes following a meltdown. They include firing half of all federal workers, returning to a gold standard, bringing all troops home, and selling overseas bases, and defaulting on debt, to name a few. What kind of timeline do you suspect would be required under these guidelines for the United States to make a full recovery?
Well, if we did everything right, if we followed my free market prescription, if we dealt with our problems by eradicating our debts, shrinking the size of government, restoring sound money, we get rid of all these rules and regulations that are an impediment to economic growth, right? We allow interest rates to go up so that we can encourage new savings that can be used to finance capital investment, so we can, produce our way, out of this gigantic hole. If we do all those things, then the road to recovery is going to be very swift, But there's a big barrier between doing that, and that's politics, because nobody wants to vote for a politician that's promising this type of, tough love, that's promising a free market prescription that involves some short-term pain in order to get to the long-term gain. The voters want somebody that promises immediate pain-free relief. And even though that's impossible, that's what the politicians promise. But when they promise that, and they deliver snake oil instead of medicine, you don't actually get better.
You're the owner of EuroPacific Bank. It's a big bank, and in the gold community, it is really big. And one of my employees banks with EuroPacific, as do several of my friends. Now, Peter, I have to say I'm a little bothered that your bank does not allow me to open an account. In fact, I even have to lie and claim that I'm not a U.S. citizen just to get onto your website. What's that? What's that all about?
Well, first of all, it's hardly a big bank, certainly as far as banks are concerned. It's a very small bank, but it is growing, and I hope it's going to grow a lot more in the years ahead, although there are, impediments to growth now. There's so much regulation now in the banking sector, thanks to the United States, that it's really slowing down the ability of small banks to even function in this environment where everybody is so afraid to do business with somebody else based on all these new rules and regulations that exist basically as a result of the United States. But one of the things that we need to do because of these banking regulations is not allow Americans to have accounts with us. All of that is a byproduct of the regulations that are being forced on the global economy by the United States government in cracking down on American citizens and their freedoms and their liberties to, travel around the world or have their money in offshore locations. The U.S. government doesn't want that. The U.S. government wants Americans keeping all their money here in America where they can easily grab it if they want it. And so they're making it more difficult for American citizens to have foreign bank accounts by making it far more expensive for foreign banks to maintain those accounts. And since I don't want to incur all those fees, I just simply don't accept Americans, which is what more and more financial institutions outside the United States are doing. They're just not doing business with American citizens because it is extremely expensive, because then you have to incur the wrath of the U.S. government and all of the extra costs that you would be burdened with in order to comply with these rules and regulations.
As a banker whose decisions have been affected by the FATCA law and who's surrounded by other bank owners, what's the general consensus as to the consequences of FATCA in, say, 10 or 20 years' time?
Well, I don't think the dollar is going to be the reserve currency in 10 or 20 years. So, the dollar is going to be an afterthought. I mean, the dollar is not going to be an important currency in global commerce. I mean, I could already see now at my bank when we first started, the dollar was the main currency that clients were using, and now it's not. Right now it's the euro. I don't know what it's going to be in 5 or 10 years, but I think the significance of the dollar is going to be greatly diminished. I mean, part of it is going to be because of things like FATCA, but a lot of it is going to be just because of the collapse in the value of the dollar, because of the runaway inflation that we are going to unleash because of our inability to raise interest rates based on the overwhelming amount of leverage in the U.S. economy. And meanwhile, the longer the Fed continues the quantitative easing, it perpetuates this phony consumer-based asset bubble economy to the detriment of the real economy, because we continue to erode away the real foundations of genuine economic growth. As we continue to shut down factories and move production offshore, our economy becomes a bigger and bigger bubble, and therefore, it requires more and more air to sustain it. And when it bursts and the dollar starts to tank, we have a real collapse in our standard of living because our ability to produce has been so, greatly diminished over the years. We rely on our ability to import products and pay for them by printing money. But if the money we're printing is losing value, then the price of all the things that we're importing is going to be skyrocketing.
I've wanted to talk to you about Bitcoin for a long time. I don't personally own any Bitcoin, but there's one thing I find striking, and rather than joining forces, the Bitcoin and gold community seem to argue the merits of each system rather than attacking the real enemy, which is fiat currency. And libertarians are notorious for this kind of infighting, but I can't help but feel that this type of behavior alienates people rather than uniting them together. To me, gold and Bitcoin are two totally different concepts. Gold's established and offers a tangible way to protect wealth. Bitcoin, on the other hand, allows for black market transactions without the dirty hands of government involved. Now that the Bitcoin hysteria has settled down a bit, I want to get your thoughts on the digital currency phenomenon.
Yeah, well, again, I mean, I think it's a bubble, just like any other bubble. You had the dot-com bubble, you had the housing bubble. You know, there was a Bitcoin bubble. I think the Bitcoin bubble has already popped. Bitcoin now, as we're speaking, they're trading around $350 for Bitcoin. You know, the high was 11 or 1200. So I think we already saw the speculative blow-off, and I don't think the currency is going to get back up to that rate again. I think that we're continuing to head lower. The reason I've been critical of Bitcoin is, you know, maybe there's probably several reasons, but I believe a lot of people who might otherwise be buying gold and actually own a real store of value are going to end up putting their faith in Bitcoin and end up getting wiped out. Because the main difference between gold and Bitcoin, and this is something that people in the Bitcoin community refuse to accept, and there's probably psychological reasons why they want to refuse to acknowledge this, because they want to believe that they're going to get rich if they just hold on to Bitcoins. But the problem is, gold had properties, was a valuable commodity in and of itself, in its own right, long before it became money. It became money because it was so universally accepted and universally desired for its properties, right? So it was a commodity that people wanted, and it was part of the barter community, but people realized that it could be used as money, and that's what gave it its monetary value, because it was so much easier to use gold as money than any other commodity that people desired. But people still desired it. It wasn't simply wanted because you can transact with it. There was a real user. People wanted gold. They wanted to own it. They wanted to possess it. And that's, what made it good as money, because it was also very scarce and very portable and malleable and divisible and had all these other properties. And so then you get this digital currency like Bitcoin that tries to replicate all of the properties that gold has that makes it function as money, but it doesn't replicate the most important quality, which made it desirable as money in the first place, which is the actual utility, the intrinsic value of the metal itself. And Bitcoin doesn't have a use. It doesn't have a history of being desired or wanted. You can't do anything with a Bitcoin. If you have a Bitcoin, all you can do is give it to somebody in exchange for something that you actually want. But there are a lot of people who actually want the gold. They don't just want gold because they want to buy something else. They want the gold. They want it, in jewelry. They want it in dentistry or electronics, or they want it in houseware. There are things that are plated with gold. So there's a real demand for gold. Yes, you can use it as money, but you can also use it for other things. You can't use Bitcoin for anything but money. And you can only use it for that so long as somebody else is willing to accept it. And that is the problem, because I do believe that the price is going to crash, and as the price crashes, all of a sudden people don't want it anymore. I think one of the big reasons that so many people wanted Bitcoin was because the price was going up. And the perception was, if you own Bitcoins, you're going to get rich. And so people wanted to buy them. But now, most of the people who own Bitcoins are losing money, right? There are still people that have made a lot of money, but those are the ones that got in very early. But the majority of people who now own Bitcoins paid a lot more for their Bitcoins than their current value. A lot of people are down 50% in Bitcoins, and they're not feeling too happy. And as the price continues to fall, you're going to have a big PR problem, where you're going to have the vast majority of users who had a very, very bad experience and who are not going to be telling their friends to buy Bitcoins, who are just probably going to swear off of Bitcoins and never buy them again. And, then you still have a bunch of people who got in really early, who bought Bitcoins for pennies and dollars a piece, that even when Bitcoin cracks 100, they're still making a significant profit. So you still have a lot of people willing to sell Bitcoins at lower and lower prices. So eventually, the bottom drops out. And so a lot of people are going to lose a lot of money. And so I'm trying to caution people about it. I mean, one of the main reasons that we are working with this company called BitPay, where people can buy precious metals from my company, Schiff Gold, they can pay using their Bitcoins. I want to make it easy for people who own Bitcoins to exchange them for gold or silver. Because gold or silver, I believe, does represent a dependable long-term store of value and a viable alternative to fiat currencies. I do not believe Bitcoin is a viable alternative. But what would be a viable alternative in the digital universe would be a digital currency that was backed by gold and redeemable in gold. And that is possible. The only difference is you do have to have a trustworthy depository that stores the gold so that you know that it's there. But that would work. But there are people who say, well, the beauty about Bitcoin is nobody actually has anything. There's no actual store of value anywhere, so you don't have to worry about it being compromised. But you don't have to worry about it because there's nothing there. It's digital, so it could collapse. The idea that everybody is going to have faith in this digital currency and that it's always going to be desired, that's what happens in a bubble. There's like 400. There's 400 digital currencies or 500. I'm losing track of how many digital currencies exist. So I mean, the supply of digital currencies is growing like wildfire.
Yeah, you make very compelling points, and the Bitcoin community seems to look at Bitcoin as a religion almost. I know someone who held their entire net worth in Bitcoin, and when the Mt. Gox exchange went down last year, they lost everything. And
they actually had their Bitcoins at Mt. Gox?
Every single dime they had ever saved. So it's this new service you have is literally trying to save people from losing everything that they've put into Bitcoin.
Yeah, but unfortunately, everybody can't get out of the Bitcoin. Only some people can get out. If everybody tried to get out, they'd have no value at all. So the only reason anybody can salvage something is because other people are not trying to do that. But, you do have people that got in really early, and they made fortunes in Bitcoin, and they have a vested interest in pumping up the market because they still have lots of Bitcoins that they want to unload. And I think that that's really what's been behind a lot of this movement to get all these businesses to accept Bitcoin. But Bitcoin becomes a victim of its own success in that respect, because as businesses accept Bitcoins, that means Bitcoins that were hoarded are now going into circulation, because none of the merchants that are accepting Bitcoins are actually keeping the Bitcoins. They get dumped on the market as soon as the merchants get them, which means that you have to have new buyers. Every time somebody goes shopping using their Bitcoin, there has to be somebody willing to buy that Bitcoin, or the price is going down.
Peter, let's finish here with general life advice. I know a lot of young men and women in the libertarian community look up to you. You're a straight shooter with a type A personality, and you're oftentimes the sole voice of reason in a room full of idiots. And there have to be times when you want to just reach across the table and strangle somebody. How do you maintain composure and stay the course?
Well, sometimes I don't, but usually I do. I'm just kind of used to, hearing all this nonsense, and people normally end up getting frustrated with me. There are plenty of experiences where, people lose their temper when I'm in the room, even when I'm just one voice out of many, because, people are so bothered by what I have to say, because it really challenges what they believe. But what's incredible is how right I was with respect to the 2008 crisis, and how publicly I was with my forecasts, and that you would think that now people would look at me a little differently and just think, well, I guess maybe he knows something. Maybe we should pay more attention to Peter Schiff. I mean, after all, he totally got it right last time, and none of us could see it, and we all made fun of him, and here he is again. Maybe we really should give him a little more credence to what this guy has to say. Instead, they treat me maybe with even more contempt than they did before, and basically all they want to say about, oh, you got lucky, you're a blind squirrel, you're a stop clock. So they don't want to attribute any understanding of economics or any real credibility to my foresight. They're just saying, look, whatever you said before, I mean, it was just pure random luck, blind squirrel, stop clock. And so we're still not going to give any credibility to what you say now. In fact, we're going to laugh even more, and forgetting about how ridiculous they were, because they're not going to say, well, we didn't understand the problem before, so maybe we're going to question our own understanding. They're basically, look, nobody could have actually predicted that. So, that was just a one-off event, and so we still think we know what we're doing, right? And so we're just as confident now as we were back then, because, there's no way that 1 in a million shot is going to happen again. That happened, that's how blind they are.
Peter, on that note, awesome interview. Thanks so much for joining us today, and we'll have to get you back on the program soon.
Yeah, and remember, my precious metals company, we just changed the name. It used to be EuroPac Precious Metals. It's now SchiffGold.com. And, even Americans can do business with that company, as well as my U.S. brokerage firm, EuroPacific Capital, right? We still accept Americans if they want to invest with me and access to global markets from the United States. And my podcast, I used to do this radio show, the Peter Schiff Show, was a daily show. We stopped doing it, but now I'm doing a podcast on the same channel, SchiffRadio.com. People can go and get my podcast. You can also sign up for it on, iTunes.
Perfect. Thanks so much.
Yeah. Okay. Bye.